Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about SoFi Technologies and Palantir Technologies. In the first article we're going to be analyzing, it's titled, SoFi Stock Heats Up Ahead of Student Loan Repayment Return, and then it has a subtitle, Bank of America Expects SoFi to Benefit from Increased Refinancing of Student Loans. And clearly, if you've looked at their share price lately, they have benefited from this overall momentum. However, we are also going to be dissecting and analyzing two other articles, one about SoFi Technologies and the other about Palantir Technologies. The second one is titled, Dipping Not Dropping, Why I Am Bullish on SoFi Despite the Bumpy Ride. Now's not the time to ignore this under-the-radar growth stock, and I completely agree with that author. This seems to be a very unappreciated growth stock that has tremendous growth ahead of them, considering that they are growing at over a 30% CAGR in regards to the revenue, meaning that they have an extremely competitive compounding annual growth rate in terms of their sales, and we will get more into that later in the video. And of course, this is going to reflect very positively on their overall accounting ratios and their share price. Lastly, we're going to round out the video talking about a subscriber favorite, which is Palantir Technologies PLTR stock, in an article titled, Here is What to Know Beyond Why Palantir Technologies Inc. PLTR is a Trending Stock. So we're going to be going over their earnings per share, their future growth metrics, some of their accounting ratios, what they could bring in their next earnings report, which is set to come in the beginning of November, and how this could positively impact their overall share price. Naturally, we're also going to be reviewing the share price targets for both of these companies. So if you want more videos on SoFi Technologies or Palantir Technologies, go ahead and annihilate that like button right now. Comment your thoughts down below, subscribe if you are new, and without further ado, let's jump right into today's stories. SoFi Technologies, as you already probably know, is a fintech company or a financial technology company that essentially operates as a digital bank. And SoFi Technologies, ticker symbol is SOFI, and the share price is up nearly 5% since this morning, considering that they are gaining a lot of interest from American investors regarding student loans. And the reason for this is because student loans are set to resume payments in just a few days. For instance, as of September 1st, interest on these loans have started to accumulate. However, payments aren't going to be due until October 1st, which, if you're watching this video right now, we are past October 1st. And when we combined these two things, we know that this is going to positively benefit SoFi Technologies, specifically because we know that the borrowers who fail to make their payments on time, it's going to impact their overall credit ratings, and it's going to increase their overall debt load. The Hill even noted that people who don't pay will not be labeled as delinquent and will not have their wages garnered and will not be referred to debt collections. However, it will drop their overall credit score, and the interest and overall total amount of debt will still accrue and get higher. And this is going to affect roughly 45 million Americans, which are going to be affected by this resumption in student loan payments. However, the good news for SoFi Technologies is that they generate revenue from refinancing student loans, which helps both the former student and SoFi as an institution. For instance, since the resumption of these repayment requirements, Bank of America has decided to turn very bullish and positive on SoFi Technologies, to where they have rated them a neutral rating and a price target of $11.50, which is higher than their current share price of around $7.77. This clearly implies that a major institution such as Bank of America, who is technically in competition with SoFi Technologies, acknowledges SoFi's future growth potential, to where they believe it could surge up to $11.50 over the next 12 months. However, not everyone is as bullish as Bank of America, because we have other financial institutions and analysts who have actually cut their rating on SoFi Technologies' SOFI stock, and they have it at an underperform rating, which honestly, in my opinion, is just not in the cards. SoFi Technologies clearly will outpace the market over the next 12 months, considering all of the catalysts that are coming up for this company, including the company turning profitable, which we will dive into a little more in the next article. However, this very bearish negative critic says that SoFi will only bring in modest profits at best in 2024. So although SoFi Technologies will become profitable, this particular institution is not impressed on the overall scope of SoFi's upcoming profits, but I would love to hear your thoughts down below about that. Now let's talk about where this company is actually headed in the future and what other analysts and professionals think about their profits. First, let's talk about some of the fundamentals of this company. First off, this company is growing very rapidly with a revenue CAGR of around 37%. If you can identify a company that has a CAGR in regards to the revenue above 30% and that can be sustained for multiple years, this means that this company is growing extremely fast. On top of that, their adjusted EBITDA spiked up by 278% to $77 million, and this will continuously increase as well as their revenue as they continuously grow their customer base. So SoFi has a very comprehensive grip on their overall market. They have very prominent clients, and the future of this company looks extremely bright, especially as they start to aim towards GAAP profitability, which they are anticipated to achieve by year's end. So honestly, we have two huge catalysts. We have students paying back on their student loans, which is going to force more demand for SoFi's student loan refinancing business, and we also have this company becoming profitable. Those are two very large catalysts that are coming up before the end of the year, and we are in the middle of one of them right now. Now, since they are going to achieve GAAP profitability, that means they are not profitable as of right now, but we need to remember that this company is still relatively young. They have a huge growth runway ahead of them, and as this company ages, I find it akin to aging fine wine because this company is only going to get better over time, especially with the student loan repayments resuming. Therefore, this company could see a lot more attention coming into the overall company and their share price over the near term, meaning over the next 12 months. So it's going to be interesting to see how the stock performs relative to the overall market in the month of October and through the end of the year because investors are very excited about this company finally turning a profit. SoFi Technologies overall has had an amazing year so far to where their share price has literally doubled in value since January. However, because of this, some doubt that the company will grow even further, even if they reach profitability, because they believe that the current profitability is already priced into the overall share price. But in my opinion, it doesn't matter because I am a long-term investor, so SoFi could continuously and will continuously rapidly expand their overall offerings over the next decade and beyond, to where SoFi aims to become the next Block or the next PayPal, and of course they are aspiring to be one of the big banks such as Bank of America. And that's why I found it so interesting why Bank of America gave SoFi Technologies such a prominent price target. And I think this is because they understand that SoFi is going to be major competition for them, considering that this company still has loads to grow. And the best part is that SoFi is growing by taking market share away from larger banks such as Bank of America, and they are doing this very well. They have diversified into loans, they offer credit cards and investing, as well as a plethora of banking services. So anything you could get at other institutions, you most likely can also get at SoFi Technologies, which is a completely digital institution, at least as far as their products and services go. That's why this author and myself remain bullish on SoFi's future, especially since we are in the midst of one catalyst and that is going to roll over into the next catalyst, which will be profitability. I anticipate from now until then, the share price could be quite volatile, but overall, I think the developments will be rather positive, especially compared to the broader stock market, which is also supposed to perform very well over the next 12 months, specifically over in 2024. So that's the news, updates, and price targets, and the latest catalysts for SoFi Technologies. But now let's talk about a subscriber favorite, which is none other than Palantir Technologies, ticker symbol PLTR, which is a big data and analytics company which serves both commercial enterprises as well as government agencies. And on top of that, this company also specializes in artificial intelligence and machine learning. Currently, the PLTR share price trades for $16 per share. However, very bullish analysts believe this company should at least be worth $25 by the end of the next 12 months, meaning that this company could literally surge in their overall share price from $16 up to $25, and that would be a phenomenal payday for investors. Palantir Technologies has already turned to investors around 5.3% over the last month, while the S&P 500 composite is down almost 3% during that same time period, so it's already showing its strength in regards to the overall market, meaning that those analysts who have a neutral rating on this company don't know what they are talking about. I've also mentioned how this company is set to surge by 500% in regards to their expected earnings. For instance, Palantir Technologies is anticipated to post earnings of 6 cents per share, and that means the company has over a 500% change compared to the year ago quarter, and that is absolutely amazing. On top of that, we also know that recent estimates increased this by another 6.1% over the last couple of days. So this means that as we approach their upcoming earnings report, we see a lot of positivity surrounding this company, and as an investor, that's exactly what we would want to see. But what about for the entire current fiscal year? What are those metrics? Well, I'm happy to inform you that those metrics are equally as positive. As an example, the consensus earnings estimate for the entire fiscal year is 23 cents on the positive side, indicating a 283.3% surge compared to last year. Again, when we're talking about 500% and a 283% surge, investors should be extremely excited about this. And over the last 30 days, we have seen positive changes of 4.3% from professionals regarding these overall projections. But that's not all. When we look at other forecasts, we can also see for the next fiscal year, they're anticipated to bring in 27 cents per share in regards to their EPS, which is a positive change of 18% for Palantir Technologies, which is still rather strong. Clearly, it's not as strong as 500% or even 283%, but overall, that 18% increase is going to do this company a lot of good. However, despite this very impressive earnings increase, Palantir Technologies is only rated as a hold rating according to Zacks rank, which does surprise me. Even though I do believe that this company is a holding opportunity at their current share price, I would disagree with Zacks rank because I don't think they understand the future potential of this company. But that's enough about their earnings per share. Let's talk about their revenue growth. For the current quarter, Palantir Technologies is anticipated to bring in $555 million, indicating a 16% revenue change on a year-over-year basis for the same quarter. On top of that, the company is anticipated to bring in $2.22 billion and $2.64 billion for the current year as well as next year, indicating a change of 16.3% and 19.1% respectively. And let me tell you why this is very impressive. Even though they're only bringing in a compounding annual growth rate of 16.3% this year, next year, their revenue is anticipated to be even better than it is this year by increasing up to 19.1%. On the higher end, other analysts and professionals believe this company could even touch a 20% CAGR, which is very good. I like how we are going to bring in strong revenue this year, and then next year, they're going to bring in even stronger revenue and a more impressive compounding annual growth rate. So it just shows as this company ages, they get even better. And that's what investors should want to see in a company. Overall, for the last 4 quarters, Palantir Technologies has surpassed earnings per share estimates 2 out of the 4 times. So 50% of the time, this company actually brings in earnings per share greater than what the current forecasts are, which is just going to add to the overall bullishness and positivity surrounding the stock headed into their upcoming earnings report for their EPS, which we talked about prior because it's supposed to surge by 500%. And since they beat these estimates 50% of the time, they could even bring in a higher earnings per share of over 500%, which would be very, very good for this overall company. In regards to their revenue, they beat their revenue estimates 3 out of 4 times, meaning that they have a 75% chance of beating on their revenue estimates. And again, that's what investors want to see because 16% is really not that impressive. 19% is far greater, but if they could beat on that overall forecast, that would reflect very positively in the overall share price. But we as long-term investors need to look at more than just their earnings per share as well as their revenue. What about the overall stock's valuation in regards to their accounting multiples, such as their price to earnings ratio or PE multiple, or their price to sales ratio or their PS multiple, or even their price to cash flow multiple or their P over CF multiple. We can compare these things to their overall industry or how the company has historically performed. outperformed. And when we look at Zacks Value Style Score, or their consensus, they rate this company an F rating in regards to their overall accounting ratios. And I think that they are half right, except they most certainly do not deserve an F rating. And here's what I mean by half right. Yes, their PE ratio and their price to sales ratio are very high. However, when we look and discount these things off of their growth, it becomes much more digestible. So by looking at the PEG or PEG ratio, we see that Palantir Technologies actually outperforms their overall industry. And when we also anticipate their growth of 16 and 19%, we can use that to discount their overall price to sales. So I think this grade of F is way too premature. I would rate this company a C rating in regards to their overall accounting ratios. But for sure, they do not deserve an F rating. Zacks rank is absolutely out of their mind for giving Palantir a rating like that, considering their extremely strong balance sheet and their impressive growth rates. But overall, I would love to hear your thoughts about Palantir Technologies and what you think the company will achieve over the next 12 months. With that being said, if you want more videos on SoFi Technologies or Palantir Technologies, go ahead and annihilate that like button right now. Comment your thoughts down below, subscribe if you are new, and don't forget to become a member of this channel to support me personally for as little as 99 cents per month. But again, if you can't afford that, don't worry. By subscribing, you're going to get this content for absolutely free. With all of that being said, I wish you the best of luck, and I will see you in the next YT video.